Everyone, let's talk more about the crypto chaos. Dan Dolev, Mizuho America's Managing Director and Senior FinTech Analyst. Dan, just encapsulate this week for us. What has been continuing to play out in front of your eyes, especially with the newest and the latest out this morning that FTX is going to be filing for Chapter 11 bankruptcy plus SBF stepping down?
Sorry, I want to say, nothing for me to do on Singles Day. So sorry about that. But beyond that, talking about crypto, I think this week kind of tells us, or anyone that didn't think that, those tokens are worth pretty much nothing, now realize that. And I think it's going to take time. I'm thinking whether this is the Bear Stearns moment or the Lehman moment, to go back to 2008 of crypto. And I think we're somewhere in between that, because, if you didn't wake up to Luna and you didn't wake up to Three Arrows, this should be a wake up call that, what you thought was worth something is actually not worth anything, and things change overnight. So I think that's a big red flag for Coinbase from a stock perspective.
Hey, Dan, it's been a long week. I just got your joke. For me, I that's what I'm rolling with. Nothing on here. But
it took a while. It's
been a long week just covering all this crypto stuff, as you can imagine. But look, what do you think the fallout here means for crypto as a payment function?
I think it means that actually not crypto, but a stable U.S. dollar is actually the answer to payments in crypto. I don't think Bitcoin is the answer. I don't think any of these tokens is the answer. So I think basically it takes, what at least it does is it tells us where crypto is not going to. It doesn't tell us where crypto is headed to, but it tells us where crypto is not going to, which means that these tokens are basically, most of them are going to expire worthless at the end of the day. And the trading volume is going to come down because the users are not coming back anytime soon once they get burned. So that's why it's bad news for Coinbase. So I think that you think about the gospel of it, I really believe in the US dollar, digital coin, whether it's a Circle minted or it's a government minted. That's the answer, because it basically puts the US dollar on the blockchain and then you can transact internationally. That's probably where it's headed towards, but it's going to take some time.
How quickly do regulators need to act when it comes to crypto?
Well, there's still about $1 trillion, I think, of so-called market cap on this. I think fairly quickly, because I think there's a lot of money that's still tied to a lot of these tokens, and if God forbid we're going to see more of these things, then a lot of people are going to lose a lot of money. So I think there definitely needs to be regulatory action around that and clarity about what are assets, what are not assets. I mean, those are all things that need to be resolved.
Dan, as you think through this, over the next couple of days, what should investors be prepared for? What should they be on the lookout for?
I think, and again, my own opinion is that there's going to be worries about, right now, Bitcoin, you're seeing what happens with Bitcoin, right? Bitcoin is kind of the bellwether for everything. So I think what investors should be prepared for is we did some work. This is actually sort of proprietary work that we've done. We've done work on the Coinbase platform. The average cost basis for Bitcoin is about 20,000. So we ran two separate surveys, 20,000. We're now at, I'm seeing on the screen, less than 17,000, which means that more than half the people, again, according to our work, are, basically losing money, right? They've lost 15% on average. And what that means is that at what point, and $10,000 is kind of that sort of point, that another big inflection point where people are making decisions. Should I stay or should I, fight or flight? And I think that this range between 10 and 20,000 is a very dangerous range, because a lot of people are saying if it doesn't go back to when you're at the money anytime soon, I think a lot of people are going to basically just give up. So I think I would watch the price of Bitcoin very carefully, and just knowing that 20,000 is a benchmark. That's a very important benchmark, because a lot of people are invested at 20,000, again, according to our survey work.
Okay, and so for all of the tertiary players that are already publicly traded and are relying on people to continue to flow funds into crypto, whether that's a Coinbase and what we've been tracking with their stock, whether that's a Robinhood, how does this impact them?
You mean in terms of those companies that are doing that? So I'm very cautious on Coinbase, right? Because if hopefully that answers your question. I'm very cautious on Coinbase, because think about how they make money. They make money off of commissions. So if you stop coming in and trading, right? If there's disinterest, or if you're not trading as much, they don't make money. So they're very vulnerable to disinterest in crypto, right? The worst thing that can happen to them is that people just lose interest in this category. And when people lose interest in a category, whether they sit on these tokens or they sell them, well, if they sell them, they're going to get sort of one-time hurrah of volumes. But let's say if they don't come back, or if they sit on these and just say, like, I'm not playing this for the next 5 years, it's pretty bad for them, right? Because that's how they make money. For Robinhood, it's not as bad of a problem, because only like 14% of their revenue comes from those tokens. Remember, Robinhood is mostly a broker. They have equities, they have options, much more diversified, and they don't really rely on those commissions to make money. So it's a big problem for Coinbase. It's not as big of an issue for Robinhood, in my opinion.
Dan, real quickly before we let you go on Coinbase, given what we are seeing in crypto, how's their liquidity situation?
So I think they're fine. Again, from what we've seen, they're fine. And I think they were very outspoken. They don't have any exposure to, or any real exposure to FTX. So I think from a liquidity perspective, we had concerns heading into the third quarter. But I think those concerns were resolved. So right now, I think their liquidity, the liquidity is not their problem. Their problem is that just the way they make money is reliant on these people, on people continuing to trade these tokens. And when people stop trading those tokens, they don't make money, and their cost base is still very high. So that's their problem, not the liquidity right now.
Got it. All right, Dan Dolev, Mizuho, America's Managing Director and Senior FinTech Analyst. Always good to talk to you. Have a great weekend.
My pleasure.